Hey guys, Mike here. So, oh boy, I guess everybody liked what Jerome Powell had to say because the market went, whoo, see you later, off to the races. And so, understand we're going to answer a few questions in this video. It's very important for you to get this. One, Jerome Powell does not care about the stock market. There are people out there I keep hearing all the time talk about, oh, he's going to push the stock market back down. He does not care about the stock market. Well, he probably does because he's got investments in it. But besides that, he don't care. What he cares about is the bond market, because without the bond market, none of the rest of it exists anyway. Okay, so as long as people are buying bonds, and as long as the bond market, which is called smart money, is buying into this whole thing about they will cut rates this year and all that stuff, and we're going to get into all the details, right? The dot plot, everything else, and show you what they put in there, and to show you what the market really loved today, right? Then everything else is good. You're going to have your ups and downs, but that if he cares about anything, that's what he cares about. Okay, that's what it is. Remember, that's how our government runs. That's how all these companies run, these large companies, small companies. They all got to be selling bonds, right? All the time, all over the world, right? So that is something we're going to get into. We'll get into some charts. I'm not going to get into a lot of charts, and I'll show you why. Okay, one thing I want to see in particular, all right? Because kind of like when you saw that first move today, sometimes the move you see on FOMC day is not the actual move itself, but we did cross a major barrier today. And so let's get into this real quick right here. And as I'm reporting this, I'm going to go ahead and tell you, MU just reported this. Bell just closed. They're about 10% right now. That's significant, and I'm going to tell you why when we look at NVIDIA and AMD, okay? Because something may be going on underneath the hood there. We're not sure, but I think it's important for at least bring it to your attention and stuff. And I did want to say, by the way, I ran into somebody who watched the channel and stuff and grocery store, and we talked for like half an hour to 45 minutes, and it was fun. I enjoyed talking to him and stuff. Shout out to him. And so, if you happen to see me out, which is rare, but if you do, most people don't recognize me anyway because the way I dress with a ball, I always have my Bears cap on. I dress down. I'm all about comfort, t-shirt, sweatpants, shorts, whatever it is. So most people don't even recognize me anyway. But if you happen to, feel free to approach me. I'm a very friendly guy. Say hello, and that's if you like me. If you don't like me, please don't stop me, especially if I'm with my family. But again, feel free to mingle and talk with me. Like I said, me and him, we don't even know each other. We talked for it felt like an hour, but I think it was like 30, 45 minutes. So I know it was pretty late at night. So anyway, just want to put that out there to you. Now, what does the market see here? Well, all of a sudden, here it is, all about the rate cuts in June, right? Pops up here at almost 70%. That's a big increase from 55%. Okay, so it's all. Remember I said yesterday, it's all about or not yesterday, the day before. It's all about the rate cuts. Okay, that's what this is about. And you look at the dot plot. When you look at the dot plot, they still have basically 3 rate cuts that'll probably happen this year. They don't have when they're going to happen. The market's just saying, hey, we think it's going to be in June. Could be later, because as Jerome Powell said when he talked about the labor market and cutting too early and inflation, they're going to have to see. I mean, it's basically going to be what it is, or basically data dependent. And when you look at this right here, this is 2024 this year, 2025, 2026. They actually increased GDP on this, real GDP from 1.4 to 2.1. Unemployment, they actually got from 4.1 to 4.0, they think. PCE inflation stayed the same, but then core PCE actually increased from 2.4 to 2.6. So they're seeing that inflation is definitely harder to bring down to that 2, which is why they're saying, man, we start cutting now, especially with economic growth and everything else, then that could be a problem. And so you see how they increase GDP, right? So it'd be real interesting to see them cut rates if something's not happening on employment. That's really the key here, and that's what he really emphasized on, was about employment and stuff. He sees a really softening labor market, and they're going to have to cut probably earlier rather than later. But right now they don't see that. And of course, what do you see? What happens to yields? They drop. Stock markets go up. Dollar drop, right? So, and you got the VIX dropping. You got the RSP, QQEW, the equal weighted ETS for the QQQ and the SPY. They're going up. So breadth, again, expands out. HYG, which we're looking at. This is important. This is smart money. What are they thinking? Boom. It's going up, right? They're buying into it, saying, hey, this is good to go, right? So this is going in the same direction as SPY. When you look over this chart, we had talked about how I was like, we don't know. We're consolidating and setting some lower highs, but not lower lows. So I said, don't make a big deal of it yet. And then all of a sudden now you see kind of breaking up here. So if this continues up, that means they're buying into this. The stock market really likes that, okay? Now, and guys, before we continue, please hit that like button. It really helps people find the video. And think about subscribing if you like a finance channel who does not try to talk over your head. There are sectors out there which really, really want to see rate cuts because they will thrive in a rate cut environment. What are those? You can see them today, buddy. They're like, thank you, Jerome Powell. Here's the banks, right? They're like, yes, we love you. You are the man, okay? Because a lot of them haven't been doing that great. You can look at travel stocks. All these travel usually carry a whole boatload of debt, so they're loving life. Like, hey, thank you. All the ARC stocks are like, yay, this is wonderful. And then, of course, FinTech is just mooning, right? And they absolutely love it because they definitely want to see rate cuts come in so they can get more business. And then, of course, the RTY, which is the futures for the Russell 2000. The reason why I'm not going to do a lot of charts today is I look at this, and when we broke through the prior week's high, right? When you break through a big level like that, you see how it immediately sold down, right, to go for a liquidity grab. So I want to see if this is going to be a continuation move. Let me just get rid of that line. That's useless. And then, of course, it's bouncing right there around the 2023 high. And so I want to see if it's going to hold that overnight and then bounce and then break right through prior week's high again to take off and start moonshotting up to 210, which would be on IWM, which we're going to look at in just a second. But you can see, I mean, look at this. This is the reaction right here. And the volatility you saw during the FOMC meeting right there, which is just nuts. And so, you know, you look at the SPX, again, huge level, 5,200, right? That's an enormous level. It's really a psychological level. It closed above that today. So that is a very bullish thing. It also does what? We talked about these trends, right? The weekly trend, the daily trend, the hourly trend. The hourly trend was down. Daily trend was sideways. Weekly trend was up. Well, guess what? We definitely are not, because this is an hourly here, in a downward trend. We busted right through that. Okay, so now all of a sudden you got upward trends on everything. We're also not sideways at this point in time. If this holds, if we don't get some sell off tomorrow, some fake out or whatever, okay? And this market is very important to understand that, because sometimes you just don't know. But when you look over here at IWM, obviously small caps want a rate cut more than anybody. This is where they'll thrive. And you can see a huge move up for this thing. It was like 2.9% or something at some point in time today. And so this is a very big move. It held that trend line that whole time we've been talking right there. That trend line, the MACD was still above the 0 line. The RSI stayed above the 50. You know, when you look at that kind of stuff, that is not bearish. That is still bullish, and it had consolidated and just been hanging around, just waiting for this FOMC, right? It's no accident. Remember, this is like a soap opera, right? You got to leave a cliffhanger. And so they were sitting right on the edge of that cliff going, boy, if he says something, we're going down, right? Again, that 50 moving average is right down there below him as well. And so that's what it was all about, just waiting for old Jerome Powell to say whether or not they were going to do only 2 rate cuts instead of 3, and he did not. Now, Tesla, most bullish flow today was Tesla, okay? And so that's why you saw a green day. This was green while this stuff was red. This stayed green all day long. Again, starting to get a bullish MACD cross on the daily. Need that RSI to be above 50 to really get the bulls back in charge. But you can see on the hourly, what are you seeing, right? Here's a high here. Here is a higher high by the end of the day. Okay, so now the trend is starting to turn up on these shorter term time frames. Again, this will be big to fill that gap right there and to get above this level as I zoom out right here. So really around 178.81, 179, somewhere in there. If you can get above that where it consolidated for almost a week right there, then you're really talking something, right? Now, NVIDIA had the most bearish flow. This is weird, right? It was red most of the day, ended up turning green at the end. But when you look at semiconductors, and again, we'll see if MU, who just reported today and is up, can pull these up. This right here was at a key level too. Again, it had been trading in this range. It fell below it the day before. But again, when you look on this, we're back in that range. Okay, so everything else was just mooning after the FOMC meeting. This one recovered. But again, not, huge moves. What are you seeing? You got still, even when it closed, a lower high, but not a lower low. So tomorrow, if we can continue to move up, we'll get a higher high, right? We never did set a lower low, right? Start moving back up in this area. And if you can break over 925-ish, 930-ish, then we're on our way, right? Now, AMD is weird because AMD didn't really participate at all. It ended red for the day. It's still just hanging here on the 50 moving average on this trend line. Again, the RSI is below 50. You had that bearish MACD cross. And so, you need the momentum start to shift back in, okay? So should that happen, you would think it would. Again, this is one of those semiconductors where like the PE ratio is through the freaking roof when you compare the others. And so, and their last earnings, their forward guidance wasn't even that great. So again, though, on technicals, it's sitting in the discount area, right? It's pulled back quite a bit since that last move up. And so, could you see people buying in? Yeah, but these are the ones I'm watching. I'm watching AMD, NVIDIA, because if those two aren't moving, right, then something's going on with semiconductors, maybe some profit taking, rotating into other sectors, that kind of stuff that would benefit from rate cuts even more, that are still beat down. And that definitely leads me to the most anticipated and maybe the biggest stock split I've ever seen. Have you ever seen a 50-for-1 stock split? I don't think I ever have. Let me know in the comments which company you've seen that in. But Chipotle announced a 50-for-1 stock split. Look, this is so important to me. I'm actually doing a members video to put out tomorrow on this company. Look at this thing. It's a restaurant company, but it trades like a tech stock. The moves are enormous. Okay, so I'm gonna put that out there. But let me know in the comments if you've ever seen something like that and what you think about it and stuff. You saw it pop today like crazy off that news. That's a huge stock split. Now, when it comes to earnings tomorrow, Intuitive, Accenture, you'll see. Darden Restaurants is another one. For sure, you'll see people pay attention to. They're going to talk a lot about us. More important, what they're seeing. Nike, Lululemon, FedEx, right? FedEx actually been doing really good, and I don't really understand why, but it has been. And of course, with Nike, you hear a lot about China, so we're getting a lot of stuff going on about China. Now, when it comes to economic data, you'll have the jobless data stuff coming out pre-market. A lot of manufacturing stuff will come out pre-market. Then we're going to have S&P Global Composite PMI Flash and Manufacturing PMI Flash and Services PMI Flash come out right after the market opens. And then, speaking of the bond market, we have a 10-year TIPS auction at 1 o'clock. So again, we'll see if this move is going to be a continuation move going into tomorrow, or do we just, get this crazy run up and then, of course, people start taking profits and then rug pull and maybe we consolidate or something. So that's really what I want to see, if we're going to start taking out the prior week's highs and stuff on these indexes, which is definitely bullish and stuff. And as long as the bond market's buying into it, guys, that's just what you got to pay attention to. As long as that stays healthy. And remember, they're trying to look out and go, okay, we still think you're cutting in June, but you're definitely giving us 3 rate cuts, which you still signify, okay? And so unless inflation goes crazy or something, again, we'll have to see what's going to happen, because remember, it's an election year, right? So the last thing the Fed's trying to do, or anybody else trying to do, is crash the market or anything else right now. I mean, they're not very good at not doing it according to, past behavior, but again, we'll see. It's kind of like Japan's rate decision, right? That can be a problem in the future, but right now it's not a problem. Okay, so just keep that in mind, because that will affect our bond market if they continue to raise rates and stuff. But right now, there's just no reason for their people or government to start buying their own bonds versus buying ours, right? You get a lot more for ours. So again, hope you guys got something out of it. Let me know what you think down at the bottom stuff. Let me know what your projection is for the rest of the week, and maybe even going forward, coming into April as well. So anyway, hope you got something out of it. Hit the like and subscribe button if you did. Really appreciate all you watch and join the membership and stuff. And I'll see you guys later.